So a recession will absolutely have an impact on the real estate market, and it has an impact in a few ways. The biggest has to do with unemployment and your ability to repay your mortgage. So if you lose your job as part of the recession, obviously it makes it more difficult to make your monthly payments. And by the way, before you default on your mortgage, you should reach out to your lender because they might have some forbearance programs for a period of time to allow you to have some missed payments, but you need to arrange that ahead of time. In the event that the employment market softens and people are losing their jobs, that's the number one thing that could cause a real softening of demand in the real estate market. If we don't see unemployment losses, and so far no one's really projecting them, then we're still gonna have pretty steady demand in the real estate market. Now, what's happening in terms of the overall impact on the real estate market is that there's downward pressure on pricing because there are just fewer buyers out there as interest rates keep going up. Also, people who have been considering purchasing a home know what they could afford a year ago and they know what they can afford today. And because interest rates have gone up, it costs a lot more money for the same price, the same house in terms of interest payment. So they're no longer looking at the same house, they're looking at cheaper houses because that's all they can afford now. It's going to take a little time to reset so that there are new buyers newly looking at the market that are setting their budgets based on current expectations. And that's going to create a little bit of downward pressure in prices. But the big thing that kind of isolates the real estate market from a dramatic downturn at the moment is that we still don't have enough supply. The pricing in the market is all about supply and demand. Right now, there's a housing shortage. We don't have enough housing units for the people who need to buy them and that are looking to buy them. In the near future, analysts are predicting that there could be a slight decline in real estate prices, but it's not going to be a huge one. In Maine, it might be as little as 5%, maybe 10% in terms of what pricing is going to do. And that's partially to counteract the fact that prices rose too quickly in the most recent buying cycles. But we're not going to see a 20%, 30%, those types of dramatic rates unless something else in the economy changes dramatically. The other things that happen in a recession is you have fewer housing units getting built. And if that's the case, then it's really going to continue to put upward pressure on real estate values. So real estate continues to be a good investment class, but when you think about the cost of real estate, you're always thinking about it as something that you hold for the long term. And you're always comparing it to what's your alternative. If you're thinking about buying versus renting, you have to look at how much am I going to pay toward rent versus how much is my monthly payment going to be and what's my equity going to be. If you're buying real estate, even if you're getting a loan, if that property goes up in value, you get to keep 100% of the appreciation of the asset. So even if you had to borrow 80%, you get to keep 100% of the gain. That's called equity. And as you pay off your mortgage over time, you get more and more equity in your house. When you're paying rent, you get nothing, and you have nothing to show at the end of the day. So thinking about real estate as a long-term investment and a long-term financial asset is kind of the way to go about it. And that's kind of the way in which real estate isolates a little bit from downturns. That's not to say that there's not going to be some volatility in the real estate market, because there is. There is going to be volatility month to month, season to season, as interest rates swing up or swing down. But until we see rates go a lot higher, or until we see something else change about the fundamentals of the market, we expect that real estate is going to continue to hold its value.